Okay, so very good morning, Tuesday the 23rd of January. I hope you're all well and had a good evening. Just to give you an overview of what we're going to cover in the briefing this morning, we've got to look at, starting to sound like a bit of a broken record, but fresh all-time highs again in the US equity market, and we'll look at some of the reasonings and the catalyst behind that. A few things to cover there, in particular the fact that there's been a stopgap kind of solution to fund the government to February 8th. So the government shutdown lasting just 3 days this time compared to the 16 days we had back in 2013. And then have a look at the pound to talk about Brexit. We'll also look at the Bank of Japan. They've had their interest rate decision overnight. And then we'll look at the day ahead. And then I'll hand you over to Sam and we'll do our usual routine. He'll look at the market a little bit more technically and some potential trade setups for the day ahead. So that's the plan. Looking at the charts then for this morning. As you can see, you've got the S&P here in the center right, you've got the DAX future on the center left, and you can see both elevated. We had a considerable move higher on the breakthrough yesterday's R2, which meant that then through the Asian session we continue to further extend on those gains, and as Eurex opened, DAX futures then gapping up, and we're up considerably here. About 128 points at the moment. So the S&P all-time high now at 2842. The Dow future managed to get up to around 26,315, and likewise the Nasdaq around 6950 now. So interesting stat I've got for you here. I'll share with you to give you some context statistically in terms of previous historical patterns when the equity market has performed this strongly. The S&P 500 is up now 6% year to date in January, so the 23 days. Since 1950, went up 5% or more for the full year, finished the green 12 out of 12 times, with an average gain of just shy of 25%. The final 11 months closed higher 11 out of 12 times. Only 1987, of course, was that of it being lower. So when the market basically has started this well, this aggressively in the year, going back when it's had a more than 5% increase is quickly 12 out of 12 times it's been green, and an average gain again of 25%. So email in my my inbox from one of our former trainees this morning. He was asking me when I think we're going to get to 3,000 in the S&P. He reckons mid-February. I reckon potentially even quicker at this rate. Certainly can't be discounted. But let's have a quick recap as to the reasoning why we've had an extension of this move. And before I get on to the government shutdown situation, there was a little bit of attention on the IMF yesterday because they released their latest kind of overall world economic growth report, where they upgraded forecasts for world growth by 0.2 percentage points to 3.9% for this year and next. It's the fastest pace of growth in 7 years. In the details, about half of the upgrades were due to the US tax cuts, of course. So what we're looking at here, you can see the stronger momentum identified on this chart. IMF seeing global growth accelerate. World growth, as we can see, printed through the course of the last several years, and then the forecast here picking up. The updated forecast for 2018-19 you can see here on the top. So a slight upgrade was received. On the breakdown though, of course, one of the things was when you start looking at the individual economies to get a bit of a sense how specific countries are faring, well then the UK is the one black sheep of the family. The UK forecast for 2019 is negative growth. So as you can see, flat for 2018 forecast change, but was subtracted in terms of the 2019. It was actually downgraded rather than upgraded, as was seen across all the other major economies that you can see there. The other thing, of course, then to talk about is the government shutdown. So Trump signs bill ending shutdown as immigration battle looms. It's amazing how politics works. It's kind of like Brexit. let's just ignore the Northern Ireland situation. We'll agree on that later on. And so happy days in the short term. It almost feels like the US government shutdown has got a similar vibe, where actually there's been no formal agreement at all on DACA, which is that kind of child immigration policy, which was the sticking point. They've kind of just said, okay, we'll just revisit that again in February. But for the short term at least, if you remember, the non-essential government jobs were put on unpaid leave yesterday, so that's been now removed, which in short is a net positive. And certainly they've managed to do a short-term quick resolution fairly promptly. So the actual vote in itself, which certainly has helped sentiment towards the back end of the US session and overnight in Asia-Pac trade, the Senate voted 81 to 18, the House voted 266 to 150 to extend government funding to the 8th of February. So this is going to come back again, as it has done already several times. It seems to be a monthly rotation. But what they're saying this time round is that this extra additional few weeks will give them times to figure out and compromise for a full year spending plan going forward, so they can kind of, again, push the goalpost to a bit more of a longer time frame. But for the short term, obviously, this has acted as a net positive, as you can see reflected in the charts this morning, particularly in the equity space, where these indices continue to surge to the upside. One thing you will notice though is that T-notes are also higher, so you've got higher equities and higher bonds at the moment. One thing is, I was looking at a chart this morning, I was looking at some technical studies and looking at RSI level in the 10-year yield of the US Treasury market, and about it's basically the most oversold in terms of what we're looking at here on the bottom side. Well, it's in oversold territory. First time since December 2016. The yield now up, obviously in excess of 2.6%. Last time we were here, we'd have to go back pretty much about 2 years ago. So maybe as well a bit of a reversal there after what had been in the Treasury market, a considerable move to the downside, very persistent. If we look on a weekly, we'd basically gone from kind of Q4 really of last year. We were trading a 128 handle, come all the way back down to 122, and then obviously on a slightly longer time frame there are some really key levels which we were breaking through, which was that previous low that we had in 2013, Q1 of 2014, which we broke only a few weeks ago. And so maybe that some of that move just abating for the time being, having been so aggressively short treasuries more recently, as it starts to get a little bit more oversold in that department. Okay, a few other things from a news perspective. You have had the Bank of Japan interest rate decision. Let me bring the yen into shot, and we can make a little bit more sense of the price movement, because it has been two different phases to the price action. If we go back to the dollar yen here, you can see, well, really what I want to look at is phase one, when we actually have the decision itself. So here you can see you've got yen strength initially. So what was the deal with the yen strength? Well, the Bank of Japan, they didn't make any real changes on policy as such, no change in policy rates or their asset purchase target. Obviously had been that change in the Rinban, which is their operations and the way they purchase as part of the parameters of longer dated debt in their bond buying program, but there are no changes there. They did, though, narrow the range for expected inflation in their outlook. So they've upped the lower bound of that range from 1.1 to 1.3% to a higher bound of 1.6. So if anything, though, looking further forward, median inflation forecasts were unchanged at 1.4% for 2018. But nonetheless, it was perceived maybe a little bit hawkish to start with. The yen did blip lower momentarily before then reversing, and really it's this move here. This was the second move, and whenever you're looking at and trying to navigate the price movement of a Bank of Japan decision, it comes in two steps. One is the much in a similar vein to the ECB, you get the interest rate announcement and the statement, and then you get the governor So in this case, Kuroda speak later on. He starts around 6:30 a.m. London time, and as you can see here, that coincides then with the reversal and the move back higher in dollar yen weakness. And so the comment here was Kuroda basically said that they are not in a situation to consider exit from QQE. Day-to-day JGB buying operations do not indicate future course of monetary policy. And so as such then, some of this kind of anticipation that potentially they might be looking at some tweaks is being pushed off the table, and we saw a full reversal. But obviously as Europe's come back in, we've seen that move just move back down towards pivot again. But hopefully that just explains a little bit of the price action over the last 12 hours or so in the dollar yen pair. Quick look elsewhere. This is more preparation. We'll go into this obviously a lot more detail on Thursday, but I'll share this with you in the chat room on Trading Live. This is a ING's useful infographic that they post ahead of big central bank decisions. And what's really great about this is that it kind of cuts through the necessity to read reams of research, because quite simply this looks at their base case scenario. So in the center, the key actual areas of focus that people look at as to judge monetary policy at the ECB, so i.e. inflation, growth, and what's going to be really important, the reference to the current euro level, given the high nature of euro dollar historically in that context, and then the QE taper guidance. So these are the four real key areas defined, and then what they've got here is where they think euro dollar will move to 2-year Schatz, 10-year Bund, and then they've got what would be said to underline that view. So if it was going to be very dovish, this is what they would sound like on the reference to euro level, unwarranted tightening of monetary conditions, where if it was very hawkish, the current euro level is not a concern, so therefore you would anticipate the euro would strengthen quite aggressively because they're willing to let the price continue to move higher. So I'll share this with you. Again, this is kind of the preparations begun now for the ECB, which we'll get on Thursday afternoon, but we'll talk about that more later in the week. And I just want to have a quick look at the pound. I'll probably leave Sam to talk about this in more detail, but obviously we have been monitoring the pound because of a key level at 140, and we actually crossed that last night, and we did trade above there in the Asia Pac session. We printed at 140.29 before just pairing back as Europe stepped into the market this morning. That level of significance, we were looking at this still marked up from yesterday, because pre-EU referendum, this was the kind of a key support level from April, and also I think it was June, just in the week or two before the actual referendum itself, that we had back in the summer of 2016. And so we're back at those levels. And I was just marking up a chart as well from earlier, because there was a key level here that we were looking at. And this is it. And again, I'll probably leave this up for Sam to talk about in more detail. But you had the volatility over the UK retail sales report on Friday. That also was a double top, which was broken in yesterday's session, as you can see. That helping amid some of the dollar weakness pre the actual US government deal being done. And then since then, we've had a little bit of profit taking. But as you can see, we found support right on that level, which, of course, if I remove it, is the daily pivot at 139.71. So a nice level of support here, just working out as well with this price action, which has come in of recent significance to keep an eye on as we go through the rest of the session. Okay, quick look at the calendar for today. First up in the morning, you've got the ZEW economic sentiment figure out of Germany. And so we're looking at a pretty similar number to before, but always be aware of the analyst range. 14 at the low, 23 at the high. What would that look like here? Well, the expectation of around 17, that's unlikely to have any meaningful impact on market prices, because that's kind of bang in line with the average of the last 4 months. If not, if you X out that one-off dip that we had back in what would have been August, then really it's in line with the average of the last several months. 14 wouldn't really be any shock, and 23 though, if that did come in at that level, would put us up at a multi-year high going back to 2015. So I'd keep an eye on that figure, but again, it's probably unlikely to be too groundbreaking. But if you're in a European asset, or you're contemplating a strategy in the Euro or DAX, then I probably would for sure keep an eye out for that number when it comes out. Otherwise, looking further forward, you've got Richmond, Fed manufacturing, you've got European consumer confidence, and as far as I'm aware, the API crude oil inventory numbers are coming out as per usual tonight, but it wouldn't be surprising if they are bumped back possibly a day if those related government employees weren't in work yesterday. But as far as I'm aware, that wasn't the case, and actually that the data should have been compiled and come out as per normal this evening. If I get any updates, I'll let you know. A few other things that are going on from a speaker perspective. The Senate Banking Committee are hearing on the nomination of Goodfriend to be a member of the Board of Governors, so giving you a bit of an insight into the flavour of the policy view. Could be worth monitoring. Fed's Evans on until the overnight session. From an earnings perspective, you've got J&J, Verizon, Procter & Gamble, so definitely J&J and Procter & Gamble would be pre-market, so maybe worth monitoring. Fairly large cap names. And then the other thing I was going to point out is the World Economic Forum, of course, gets underway in Davos. So today's the first day. This event continues all the way through to Friday. I think it's something like nearly 400 influential market kind of movers and shakers are in attendance, including the most heads of state that the event has ever had, including people like Theresa May. But one thing I want to draw attention to is that what you can do from a practical sense is if you go on the World Economic Forum website, so I kind of navigate through this exactly as I would for a central banking event. If you click on program, and then basically this will bring you up the entire schedule for the day's events chronologically. So what you can do, and what I certainly do as preparation, is that every morning as soon as I get in, I go through this exact media calendar to see who is speaking when and on what topic. So again, applying the same principle as when you are looking at a central bank, the ECB website, or the Bank of England, so on and so forth. Now, the one interesting one here, if I scroll down, I think it's at local time 4:30. Keep going down. You've got a special address by the Canadian Prime Minister. Now, normally this wouldn't garner too much interest, but the reason why I'm pointing this out is because the 6th round of NAFTA talks get underway in Montreal, Canada as well, at around the same time that Trudeau is giving his speech, or keynote speech, at Davos today. So maybe just a consideration if you are looking at the CAD currency. It does tend to be quite sensitive to NAFTA updates. So just given that is happening today, I would be mindful of that, and kind of keeping a close ear on the squawk and monitoring of Twitter is probably warranted if you're looking at the loonie today. This is it, NAFTA, and this is really where we're at the moment. The future hangs in the balance as negotiators from the US, Canada and Mexico try to settle their major differences. Revamping a pact with Donald Trump has threatened to abandon, and so that's the current stance, and still quite a few things to get through on that regard. Alright, that's it from me. So have a good day. I'll see you in the chat room. I'm going to hand you over to Sam, and he'll have a look at some of the charts with you. Thanks, guys.
Good morning, guys. I'm just going to open up a chart. Where's the mouse?
Breaking news.
And we'll have a run through a few of those now. Start off with the pound, as Ant mentioned, pushing to that 140. We talked about it briefly yesterday, and well, I thought it would happen, maybe not yesterday evening as quick as it did, but we found support on what was the previous high of the year. Briefly here, dollar has strengthened a bit this morning, although just briefly over the last 10 minutes or so, just having a little bit of a rest. Levels below the pivot or near the low of the day that I would be aware of for the pound. You've got this pullback late last night, which sort of was the catalyst for then the push higher. 139.56 on the futures, definitely something I would have marked up. If this is to see any sort of correction, it's really got to go through this level, and then it sort of opens the door to the downside. But I would still, for the short term, favour an up move. With the pound pushing higher this morning, late last night, the FTSE is definitely something to be aware of, and that's actually come under a bit of pressure this morning, briefly, although S1 holding firm. A bit of a stuck in a range last few days. The low that we mentioned a few times last week, we found support on. If I just switch back to show you guys here, holding firm, and we're just sort of in this consolidation area now. It could be quite interesting for the FTSE, whether we look to push on and sort of join the US in pushing to all-time highs, or if the pound was to continue strengthening perhaps, and the FTSE could come under a bit of pressure and we start drifting low. So definitely something to be wary of going into the remainder of the week and month. In terms of the pound, where we could really get to if we were to continue going, and my opinion is that we will. Obviously this is a bit of a hurdle here, and you can see that sort of pre-Brexit low that we're just finding a bit of resistance on now. Obviously you're always going to have a little bit of a break, few stops could have been around there as well, but it's definitely an attractive place for people to look to get into the market. If they do believe we're now overbought a bit, or for a bit of a respite. If we were to come back down, obviously quite a way away now, this was obviously a big level that we broke through a few weeks ago. Further push on through, and then we could really start to push on into the 40s, but holding just under 140 for now. Euro, obviously we've got the data out at 10 o'clock. Which could move things around. We've got bigger things later in the week as well to be aware of, and we're still, as of really the last couple of weeks, in this sort of bit of a messy range. And I think looking at the lows from yesterday, which worked really well with Friday's low as well, that still offers a good area of support. The highs just above, well, just below, sorry, I should say, the R2, sort of defining the range of the last sort of 4.5 or 3.5 trading days. Something I would just have in mind. Obviously going through at the moment, we're just pushing a bit higher, having found support around S1 and yesterday evening's low. This area is definitely one to be aware of. I know a couple people are long euro at the moment. What was the low of the morning? Definitely somewhere I'd be looking to take a bit of profit here, as it could definitely be an area where dollar buyers look to come back in, and shorting the euro dollar could look quite attractive from this point on that classic. See the breakthrough, come back and possibly find a bit of resistance around there. Other currency pairs, Aussie dollar, we've seen pushed down quite a bit this morning from those multi-week highs. In terms of places to get back in, similar with the euro sort of idea of a pullback to continue the short. You've got yesterday's lows. If we were to retrace a bit to there, quite a nice sort of trade to look to get short, aiming for those low again. If we can continue the trend of the day and push lower, we've got quite an interesting point of support from the 15th and the 17th, 16th and the 18th lows here. You can see quite a big area of support that we're not a million miles away from today. I would expect, however, a bit of a retracement before we look to have a go at that level. The yen, as mentioned, you can see coming down, bit of support below the S1 and last Friday's lows as well, which would be a big area to be aware of. Push through that, and it sort of opens the door up to the low that we made on the 16th. With the pound finding a bid yesterday, if we have a quick look over, and I'm going to do it on the CFD, this is a bit more liquid here, but for euro pound, quite a big area of support. We're just on, well, almost got to. So you can see here the low of the 14th of December, if we really were to continue to push on, and that could be either through the pound strength or maybe, you know, data-wise euro weakness, or later in the week a further push in the direction that we've come for the last few days, it really does open the door to this low that we made early on in December, and it's not out of the question. I believe pound can definitely still strengthen, and we look to push on there. So the data coming out, well, just under an hour, literally just now, something to be aware of. I would say normal service resumed. US equities, if we just lower this down, you can see once we, and I was looking actually when I got home, and I'm just going to open up 3 charts to draw these same lines on. Made the high during the day, and here it is in the Dow, pretty much in line with its previous all-time high. The Nasdaq, you can see here, pretty much similar time, just after 5 o'clock. Okay, so the Dow one, the Nasdaq, sorry, is up here. There we go. You can see pretty much all at the same time, just after, well, the closest to 6, it was all pushed on and continued that move this morning. Normal service resumed. The Dow has been held up at the R1. I wouldn't be wanting to get into aggressively, but definitely the direction for now has got to be to the upside. Maybe the only time you wouldn't want to be long is that cash open, just in case you get a bit of profit taken on this new all-time high. But normal sentiment service resume for now. Levels where you could get in, or that would be attractive to buyers. Nasdaq, you have this sort of low of the day, which looks quite good, but that does seem quite some way away. So yesterday's high on a pullback to this point offers good support. Similar for the Dow, and the fact that yesterday's high, which has already acted as good support this morning, still looks quite good. But every sort of new high that's made, I think, would be obviously when broken through would still be an attractive place for buyers to get into, then target what is at that point in time the new all-time high. And I think we'll continue to make highs for the remainder of the month and through on, to be honest. Stocks in Europe gapped higher, and obviously this is the highest we have been for some while. And we look at the DAX, you can see really pushing on here. I'm just going to put this on to a weekly chart, and it might be that having pushed through here definitely would have this level 1 from the week of November, that if we can come back to here on futures just below the R1 to find some sort of support. But of course data is something I would definitely factor in to be aware of. Oil, as mentioned, we more than likely will have the data out this evening. Usually doesn't have the biggest effect on the market. As you know, DOE on the Wednesdays is the main data release. Quite choppy yesterday, oil, that technical push higher as we sort of came to the close of sort of trading here in London, only to come back and start exactly where finish, or exactly where it started. So has been quite messy, still in this sort of consolidation range of the last few weeks. Probably going to take something quite big to push us either way. But pivot from a technical point of view looks good for a long. The highs of the day not too far away from yesterday's highs, which would offer good resistance for this market. Quick look at Bitcoin, which did briefly go under 10,000 yesterday, only to sort of, well, come back a slight bit higher, but the overall trend, you'd have to say, is still to the downside, and probably could get a little bit of a trend on the last few days, where the highs getting just a bit lower each time. So definitely worth for those crypto traders to be aware of those levels in Bitcoin. Gold, just to finish up, pushing on. R1 found good resistance today, really messy, and this would be a great example of when just to sort of leave a level alone. I think R1 is now almost not even worth sort of considering. You can see how the first couple of tests today worked really well, but since then it's been incredibly messy. The high of the day would be quite a bit more interesting, but even then you have the high from Friday, which looks a lot better, a lot stronger level. Pullbacks, low of the morning, could offer good support for those looking to continue, but I'll be keeping an eye on the dollar just in case we do have a bit of a recovery today. But as has been the case for a while, any little dollar recovery is just met with more buyers for the other currencies. Just going to finish up quickly, on the pound, just to see where we're at. So that pivot has held okay, but we're looking just to drift a bit lower. Didn't quite make it back to what was the previous low of the day, but I would definitely be having on these levels from last night. 139.56 for the futures is one that I would have my eyes on. Obviously, any questions, as usual, get them in the chat. Just having a quick look, corner of my eye for those dollar yen traders. We are not far away from that S1 and low of the day, which matches up quite well to yesterday's low.